what are some of the value sectors right now? Because we have seen more participation, if you will, outside of tech. We have industrials higher, utilities higher. So it isn't just a tech rally, but to your point, it hasn't been as broad based. So tell us some of the value sectors you found.
Well, the places I would look right now is, I think a key to this is going to be the reason we've had such a narrow bull market, I think, is because the Federal Reserve in this bull market has been tight throughout almost its entire existence. It's eased in 3 months late last year. And outside of that, it's been raising rates or being tight with monetary policy throughout the bull. It's a rarity. If I go back in post-war history, almost all bull markets begin with monetary easing and have easing going on during a substantial portion of the bull. This one has lived its entire existence under tightening. I think that's why it's been such a narrow advance. It's when you have tightening going on, monetary tightening, it kind of wipes out a lot of the general stock market that needs monetary liquidity, that needs lower interest rates to perform. And it puts us into the most kind of conservative, not really conservative, but unit growth companies there are that aren't as dependent upon policy easing to get their earnings. And that is the quintessential technology and growth stock, which has been the pinnacle of this bull market. I think, though, the Fed's getting close to easing. If we can get this tariff thing resolved before too long, I think the Fed's going to ease into this and will be the first easing really on a consistent basis of this bull market. And I think that's going to awaken a lot of parts of the stock market we haven't seen yet. I think, when we drop rates, and the liquidity or monetary growth rate is going to pick up. And I think one of the biggest beneficiaries is going to be small cap stocks. Overall, I know they've been left for dead, and I even have trouble saying or recommending them because they've been dead for so long. But I do think it's been tied to Fed policy, and if that changes, I think that's going to change right into the sweet spot of small cap stocks. I would also point out, just in the last month or so, micro cap stocks have picked up a fair amount relative to small caps, the Russell 2000, and maybe that's a sign from the very bottom up that capitalization is starting to awaken a little bit. I'd also point out that we've had a little better activity in, IPOs and some of that things, which is down on the cap spectrum as well. So there might be some good signs going on there because, in part, the money supply is starting to rise again. It was negative for so long, year on year, at a record-setting length of time, that it's now back positive and still growing, and that could help that sector. I think there's a lot of values throughout that entire marketplace. I also like international stocks in general because we're already seeing, if we drop rates and increase the U.S. money supply in a slower growing U.S. economy, that's going to bring the U.S. dollar down. It's already starting to occur. As the money growth's picked up, as concerns about growth slowing a little bit has come down, you can see the dollar weakening, and that's enlivened the international stock markets, which really, they're doing about as well as some of the tech sectors here in the United States late with dollar weakness. I think that's going to continue. The dollar is extraordinarily high. At the start of this year, the real value of the trade-weighted U.S. dollar index got to within a couple percentage points of its all-time record high in March of 1985. And you could argue that in the last decade, the dollar's gone up about 50% in real terms. That's one of our tightest dollar policies we've ever employed since the dollar began floating in the early 1970s. And it's killed international stocks more than anything. If the dollar now is starting to weaken, it could weaken a long ways just to get back to average, and that could do a lot for international stocks in general. And then lastly, I think value stocks, just in general, sort of looking at the perspective of lower PEs stocks overall, probably more cyclically based areas of the market, I think are attractive because of our tight monetary policy overall, and because of our restrictive dollar and because of the chronic inverted yield curve or flat yield curve that we've had, and the chronic 7% mortgage rate in the economy, which is growing in 2% or less right now, I think that's just depressed kind of the cyclical value parts of the stock market. If we do ease now for a period of time on a consistent basis, I think that could pick up a lot of that cyclical part of the market and some of those deep value plays. You know, it takes confidence to buy things that have been so out of favor for so long. And one of the things that is going to be necessary for value stocks to do better is we're going to have to lift consumer and business confidence in this country. And again, it's not the only thing holding it down, but I think one of the big things is just a long period of time with monetary tightening going on. And if we turn to easing, we start lifting the money supply, lowering yields, expand or steepen the yield curve, I think confidence about the future economy improves. And in that sort of situation, confidence on Main Street picks up, and that's the type of thing needed for investors to look at some beat up, but really attractively valued parts of the marketplace that people have ignored for a long time.